Apple, the world's second most valued company, is under pressure. Multiple troubles have surrounded the US tech giant. Just last week, two bad reports led to over a 5% drop in Apple's share prices. Billions got wiped off from the company's market value. The worst news came from China, a crucial market for Apple. A report said that iPhone sales in China have plummeted in the first 6 weeks of 2024. All this while, competitors like Huawei saw a sharp rise, biting away a large chunk of Apple's market share. Apple's problems in China are not new. However, the latest report points to a brewing crisis. Last week, a report by Hong Kong-based research firm Counterpoint said that iPhone sales crashed by a massive 24% in the country. This was during the first 6 weeks of 2024 compared to the same period last year. This period is very significant in China. It's right before the Lunar New Year. Consumer spending usually sharply rises during this time. While Apple's sales tanked, Chinese smartphone brands saw a jump in demand. Huawei's sales surged by 64%. Honor, which split from Huawei in 2020, also saw its sales rise by 2%. Analysts say that aggressive pricing and low demand have left Apple struggling in the region. Meanwhile, Chinese brands like Huawei, Honor, Vivo, Oppo, and Xiaomi are making a comeback. According to the Counterpoint report, Apple's smartphone market share in China dropped to 16% last year from 19% in 2022. Apple now ranks 4th in the Chinese smartphone market, sliding down from the 2nd place in 2022. At the same time, Huawei has risen to the 2nd place by capturing over 17% market share. But Apple's decline in China is no surprise. Demand for its products have been falling for a while now. Data shows Apple's sales were on a downward trajectory throughout 2023. Just in the last quarter, the iPhone maker's sales in China fell by 13% on a yearly basis. This gave way to Apple's worst December quarter sales in the country since 2020. While rising competition and slowing demand concern Apple in China, another storm is brewing in Europe. On March 4th, Apple was slapped with a massive $2 billion fine by the European Union markets regulator. That's because Apple has been accused of thwarting competition. Apple charges a 30% commission on all in-app purchases made through its payment system. For example, if a user purchases an app on their iPhone, they must do this through Apple's App Store. For this, the app developer is forced to use Apple's payment system, which requires them to pay a 30% cut to Apple for each transaction. Apple has restricted the use of other cheaper subscription options outside its App Store. In 2019, music app Spotify filed a complaint about this fee, which led to the EU slapping a fine on Apple.
For decades, Apple has restricted music streaming app developers from informing their consumers about cheaper options available outside of the app. Apple has done so by contractually imposing anti-steering rules on music streaming app developers.
This fine is just the tip of the iceberg for Apple and other big tech companies in Europe. The EU is getting tough on digital market monopoly. In 2022, they passed the Digital Markets Act, or DMA, which brought new rules for tech giants operating in the region. So what does it mean for Apple? The DMA will force Apple to allow app downloads from outside its App Store, something it doesn't allow currently. The EU may also make Apple charge more reasonable fees to developers. Currently, Apple takes a 30% cut of most in-app purchases, which developers say is too high. This new law will also let users choose default browser apps, which is not pre-selected by Apple. All of this is expected to bring new competition for the firm. Apple has already updated the iPhone for EU users to comply with the DMA. As things stand today, Apple is under the eye of the storm. It's losing market dominance. Present crises strike at the core of Apple's business model. To weather this, the tech giant will need to swiftly adapt to newer rules. In its 47 years of history, Apple is known for bringing out game-changing products. It has helped the firm come out of many past hardships, starting from the personal computer Macintosh to the music handset, the iPod, be it the revolutionary iPhone or the latest virtual reality headset, the Vision Pro. To maneuver out of the current downfall this time, Apple may need something even more unique to retain its dominant position, or perhaps give it away.